You're hoping for a good trading day today. What are you actually expecting to see?
If we have a look at what's driving the market, part of it is the positive sentiment that came out of the EU summit last week, and we have started to see those longer-term bond yields in Europe starting to fall. So with the Spanish 10-year bond yield now down at 6.2%, so those problems taking a little bit of a back seat. Instead, the market really focusing in on more easing, which is expected to come out of the US, Europe and China, and that seems to be a key driver of markets. We did see the pre-holiday trading session in the US, but a rise of 0.6% there, and energy stocks really leading the session. We saw oil prices jumping by 4.7%, but commodity prices in general doing quite well overnight. We saw copper prices up by about 2%. We saw BHP and Rio gaining about 2 to 3% in London, and the BHP ADRs in New York up by 1.6%. So it does look like the miners really are going to be the highlight of this Australian session. But one thing to watch are the volumes. Yesterday we saw a meagre $3.3 billion worth of stock being traded on the Australian market. So we're back to holiday-like volumes. So one of the things that we'll be watching are the volumes, because we know that the 4th of July we will see the US session close tonight for a holiday. So no doubt that volumes will probably continue to be quite low on the Aussie market.
Right, well listen, let's also ponder, if we can, and good morning to you, Julia, Centro, because this is a stock that has been in people's consciousness for so long. Things look to have been turning the tide of late. What's your view now on making a play on that stock?
If we have a look at Centro Retail, it has undergone a lot of changes, and the big one is the amount of gearing that it had on its books. So if we have a look at the global financial crisis, it did get into trouble because of the high leverage that it had, but it's a very different company now. It is 100% Australian real estate focused, and if we have a look at the balance sheet, it's in a much healthier state. If we have a look at the LVR in its core debt facility, it's down at just 22%. And if we have a look at Centro Retail, this is actually a property trust which probably has the capacity for upside earnings risk over the next 24 months. And that's because if we do see cheaper refinancing coming through because of its more conservative balance sheet, as well as a cutting of expenses, then we could see potential upside earnings risk. So looking a lot more attractive. Now, it has come up with a market update this morning, and the valuation of its assets has gone up. If we have a look at its $6.6 billion managed property portfolio, that went up by about $76 million. And if we have a look at the 41 shopping centres, that went up by about $50 million, or about 1.3% compared to the December valuation, so sitting at about $3.8 billion. Now, the new Centro Retail shares started trading in December, and so far it's been a pretty good run. The shares are up 17% since December, when it restarted trading as that new entity. So a very different entity, much more conservatively geared. And I guess if we have a look at the potential for Centro Retail, potential upside earnings risk, and that's reflected in the share price action that we've seen over the last 6 months.
Julia, you've also been looking at Virgin Blue today because it's come out with some May stats. Anything of particular interest? How did it fare?
Virgin is one of these companies which is in the middle of strategic repositioning, and they're repositioning themselves from focusing in on a low-fare business model to focusing more in on the business segment here domestically in Australia. And really, if we have a look at some of the goals it's trying to hit, it is looking at double-digit yield growth in FY12, which is quite aggressive. If we have a look at Virgin, it's been doing quite well. If we have a look at the May statistics, the domestic passenger numbers in particular doing quite well, with a rise of 10.3%. The international passengers compared to the previous year, they're looking flat, but that's to be expected, and that's really as a consequence of Virgin moving out of the New Zealand domestic market in October 2010. We know that the leisure market has been under pressure, but really it looks like limited impact from the numbers coming out today. So if we have a look at Virgin shares, they have been doing quite well in the last 52 weeks, up by 19%. And if you compare that to a stock like Qantas, unfortunately, Qantas has had a pretty bad time of it over the last year, down by 44%. So Virgin numbers still repositioning their strategy, but altogether supporting that it's doing pretty well here in the Australian